got a FOMC meeting this week. We've got CPI inflation data out this week, something a lot more hawkish coming from the Fed, or a much hotter than expected CPI reading. We could see this market take a pretty sharp downturn because this market is all predicated right now on the Fed cutting rates. Okay, here's what you need to know before the bell this morning. Futures are pointing a little bit lower this morning, not surprising. Again, we've just had a very strong run in the markets over the last several weeks. We came down, tested the 20-day moving average, held onto that just as expected. We've now rallied back above that, set an all-time high last week. So again, probably over the next few days, potentially today, we're going to come down and retest that 20-day moving average again. And again, this is very much kind of like the market environment that we saw previously, all the way from November through really kind of February, March of this year, as just a very steady trend in the markets higher, just kind of bouncing off that 20-day moving average. That was the primary support for the markets. Every time the markets came down there, algorithms would kick in, start buying stocks. We seem to be kind of setting up right now that same type of environment that could run through July and into August. So again, we've got a couple of months here where this market could continue just to kind of migrate higher without some catalyst. And again, as we're coming into the next few weeks, we've got a FOMC meeting this week. We've got CPI inflation data out this week, something a lot more hawkish coming from the Fed, or a much hotter than expected CPI reading. We could see this market take a pretty sharp downturn because this market is all predicated right now on the Fed cutting rates. And the expectations are that on Wednesday, the Fed will not cut rates, but that we're going to have an update onto the reversal of quantitative tightening beginning in July, and that rate cuts are still on the table, but probably maybe in the next couple of meetings, right? It'll be just later on this year. That's the expectation right now. Now, of course, the Fed could come out, say something, the recent employment report was much stronger than expected, and we're more concerned about inflation, whatever. They could say something a little bit more hawkish. And again, if they do that, I don't expect they will. I expect the message to be pretty much what the Fed speakers have been saying over the last several weeks, which is pretty much status quo, on track to cut rates. Everything's kind of working, to plan at this moment. That's just kind of been the message from every one of the Fed speakers, very much in consensus with each other. Not a lot of dissent between Fed speakers as of late, and the market's been playing off of that. So this market's looking for easier monetary accommodation to come through Fed rate cuts, and of course through a reversal of quantitative tightening, reducing that drag of liquidity on the market. So markets have been rallying on that. So again, nothing much to change that here going into the election. I don't expect the Fed to do anything, too massive in terms of making any changes right now, particularly ahead of the election, because they don't want to be indicated that, they're influencing the outcome of the election for one party or the other, cutting rates, not cutting rates, hiking rates, etc. Pretty much expecting status quo from the Fed this week. Of course, we'll talk more about their actual results on Thursday with Michael Leibowitz. But again, this market just continues to kind of grind higher. So again, no reason to be overly concerned about the markets, but continue to do that risk management process. Trim your winners, sell your losers, rebalance to portfolio targets, etc. Just manage the risk in your portfolio. You'll be fine. All right, that's what you need to know before the bell this morning.